Let's do business in 25 minutes as the year comes to a close. And here's what we have prepared for you in Business Incorporated. Not very good news in Zimbabwe. They said there's going to be food crisis next year. Meanwhile, Egypt is getting $22 million in grants from Japan to develop Suez Canal vessel road. And first quarter of next year, Rwanda is planning to begin nuclear chemical production. Welcome to the program. I'm Ini John Mekwa. We start business as usual from the global oil space, where prices rose by more than 1%. We saw that this morning. Investors are weighing talks between the U.S. and Ukrainian president on a possible deal to end the war in Ukraine against potential oil supply disruption in the Middle East. Look at the numbers for this afternoon, much higher than what we had earlier today when Ladi was on Business Morning. This morning we have just about 1%, but that has jumped further. 2.01% in the green is what Brent has recorded. WTI 2.11%, and we see price of Brent here at $61.86 a barrel, while for WTI is $57.94 a barrel. So we know that yesterday, Ukrainian President Volodymyr Zelensky said that there's been significant progress had been made in talks with the United States President Donald Trump, and has agreed that U.S. and Ukrainian teams would meet again next week to finalize issues aimed at ending Russia's war in Ukraine. Saudi Arabia, which is the world's largest oil exporter, is expected to lower the February price for its flagship Arab Light crude for Asian buyers for a third month, and that mirrors declines in the spot market owing to abundant supplies. And also investors are waiting U.S. stockpiles data for the week to December 19, with an extended poll showing that U.S. crude oil inventories were expected to have fallen last week, while distillate and gasoline inventories are likely to have risen. A bit of delay in that now because of the shortened holiday week we had last week, and of course we're expecting that again this week. Moving over to metals now, silver retreated after touching a record peak above $80 an ounce on Monday, while gold slipped from levels close to historic highs as investors booked profits and a market perception of reduced geopolitical risks curbed safe haven buying. Bullion has risen about 72% this year, rallying on factors such as softer U.S. monetary policy, weaker dollar, geopolitical friction, and robust central bank purchases. And that's outperforming gold. Silver has gained 181% so far this year, driven by its designation as a U.S. critical mineral supply, shortages, and rising industrial and investor appetite. So looking at the numbers now, we see that retreat that we talked about for spot gold, down 1.59% to $4,480. Spot silver, 2.62% down in the red there, $75, away from that $80 that it hit. Platinum, 5.2% down, $2,348.70. Palladium, 10.49. Yes, you heard that right. More than 10%, almost 10.5% down to 1,811. I guess when there's profit, investors will have to take it. So that's just what has happened. And we have copper. Copper, of course, has joined this group of soaring metals since last week. But for today, it lost 2.36% and is now at $5.70 a barrel. An ounce, I beg your pardon. Now move to not so pleasant news in Zimbabwe, where vulnerable communities across the country are likely to face a food insecurity crisis early next year, with more households projected to slip into critical conditions before a possible improvement from April or May following the main harvest. In a latest report, the Farming Early Warning System Network, FEWSNet, said that poor households in typical deficit-producing areas, including parts of Matabeleland, North and South, Masingo and Manika land, Midlands, and the far north of Mashola land, the provinces there, that they will struggle to access adequate food during the peak lean season, which is between December and March of next year. Tanzania is rapidly consolidating its dominance in Uganda's import market, with shipments reaching $2.26 billion in the first 10 months of 2025, a volume that not only eclipses Kenya's export, but also exceeds the combined supply from all other East African countries. Between January and October 2025, Uganda imported $2.26 billion worth of goods from Tanzania, compared with $1.35 billion that it imported in the same period from Kenya. And Egypt is hoping to enhance the navigational safety of the busy Suez Canal after securing $22 million grant to finance the construction of a dual-fuel diving support vessel, DSV. As more shipping lines make a return to the waterway owing to the gradual return of stability in the Red Sea region, the country said that it has secured the grants from the Japanese government for the vessel, which will join the Suez Canal Authority fleet. The grant was provided through a Japan International Cooperation Agency. Described as the first of its kind, the new vessel will be deployed for multiple purposes, notably to enhance navigational safety, towing operations, assisting vessels during maneuvering, and strengthening emergency response capacity. The vessel, which will be built in Japan, will measure 45 meters in length and will have a total weight of 620 tons, cruising at a maximum speed of 12 knots and with capacity to accommodate up to 29 personnel. The vessel will operate on a dual-fuel engine system, that's diesel and natural gas, and that's to reduce carbon emissions and ensure sustainable operations. Also of importance is that the DSV will be equipped with advanced search and diving systems and essential equipment to support divers safely and efficiently, including 2 decompressing chambers for diving, search, rescue, and recovery operations, as well as a waste treatment unit. Construction of the new vessel comes as SCA is in the process of firming all of this. Liberia's government has ratified a key rail and port agreement that grants Ivanhoe Atlantic development rights and guaranteed access to the country's rail and port infrastructure, a move expected to support cross-border mineral transport and broader economic activity along the Liberty Corridor. Under the concession and access agreement, the US-based mining company will transport ultra-high-grade iron ore from its North Kweni project in Guinea to the Liberian ports using the state-owned Yekepa-Buchan Railway. The Kweni project, which is partly owned by the government of Guinea, involves iron ore with a grade exceeding 67% iron content and is projected to generate an estimated $16.7 billion in revenues for Guinea over its lifetime through royalties, taxes, and development fund contributions. Now, Rwanda is heading big in 2026, and they're starting in the first quarter of the year. They're set to become a producer of radionuclides, which is a key chemical for nuclear medicine. Nuclear medicine is a specialized medical field that uses small amounts of radioactive materials known as radiotracers to diagnose and treat diseases by observing physiological functions and cellular activity inside the body. It uses advanced technologies such as positron emission tomography, which is expected to be rolled out at Rwanda Military Referral and Teaching Hospital next year. Now, markets open today after Thursday and Friday's close, and we see it open with green number for Nigeria, 0.18%. We're still hovering around the 153. Perhaps we can hit that 154,000 level, which we peaked in October, hopefully. But for now, we see that, well, at least the green color is back, and we're at 153,820.20. Let's speak to Mr. Tajuddin Olayinka. Mr. Olayinka is the Chief Executive Officer of Wyoming Capital and Partners, joining us now. Mr. Olayinka, good afternoon. Compliment of the season to you. Hello, Mr. Olayinka.
Good afternoon. I wish you same. Good to see you.
Same here, same here. So we see yes, the market is green. I don't know if Santa is there or if we're just smelling Santa.
Santa is actually a function of what investors have to in the new year, especially with the end result of these companies. I haven't seen the first 3 quarters result that have had their prices improved upon, and those that are not so good, of course, are treated accordingly. So Santa is now saying, okay, are we still together to have this usual rally that normally have by this year end, usual thing from November, but we seem to be having a delayed one this time around because of that several factors against prices indicators, especially the one that we have cause to with the against tax and some others like that. So, hello.
I can hear you, Mr. Olayinka. Mr. Olayinka, can you hear me?
Okay, so this one, I'm okay now.
Okay.
So that actually affected that will push prices that we saw in most part of the 3rd quarter and even in most part of the 4th quarter. We are likely to see improvement for rally income, but this issue against has been rested. Reason being that why people are having what do you call it, that is not going to affect retail investors. The investors that have been targeted are likely to be the ones that have liquidity in the market. So if the process has to be affected, then you are saying that you want to bring back liquidity to the market. This retail investors, other investors that are not so affected will have to deal with. So these are issues. I want to do that. We still have rally, but what militate against that issue of capital gains tax, critical investors, this
all right, Mr. Olayinka, the network is not very friendly with us. I mean, I hear you talk about the capital gains tax, and we remember, I think that was in November, yes, last month, we had that big fall, the biggest crash or decline in the market value. It was more than 4 trillion naira. Obviously, because of that, well, Mr. Oyedele will tell you misconception or misunderstanding of parts of the capital gains tax. But we're glad that that was sorted out. We saw the minister on the floor of the exchange, and he explained some of that. We also had Mr. Taro Oyedele on our program and various platforms explaining some of those misconceptions. And so we saw investors coming back to the market, even though we haven't hit that 154,000 level, which was our peak in October. And we hope, I mean, we have a couple of days left. Hopefully, Santa will bring us good luck in this case, and we would have.
The fiscal factor is just what I've just explained. The capital gas has been explained by the Taiwo, but the issue there is that it is not in it the way market see it. You see, the dynamics is completely different from the way it's at it. The against tax is going to affect liquidity providers. The liquidity providers are institutional investors who play in the market, who are very active in the market. If you do things that will take them from the market, then if it affects liquidity, the liquidity will now come back to investors that are not targeting capital tax. And so when that happens, investors now pricing securities across market and instruments, especially with the fact that they are not going to enjoy the kind of liquidity they enjoy in the previous years, or that normally enjoy time to. So these are the issues. That's where they may be getting wrong. he is looking at targeting the class of investors or the class of investors liquidity providers. Once the activity in the market, then it affects liquidity in the market, and then in that way you have now introduced liquidity market. So it's to a class of investors that you are not targeting. So indirectly, this class of investors, this same investors, and other investors that are not going to be part of CGT are going to be CGT through liquidity risk.
Okay, all right, Mr. Olayinka, liquidity investors or liquidity providers is who the group that you're concerned about. We'll find a way to ask Mr. Oyedele that. Perhaps there are still more clarifications that need to be done. But thank you so much, Chief Executive Officer of Wyoming Capital and Partners, Mr. Tajuddin Olayinka, and please enjoy the holiday ahead.
Thank you. Good to you.
Okay, so let's see other markets now and see what the numbers look like at this time. You could have the other markets. Thank you so much. So we have Egypt at intraday is positive 0.13% at 41,657.55. For Nairobi, closed. This is the close from Friday. It's closed positive 0.21%, 183.98. Let's see other parts of the world. In the Middle East, Dubai is red at intraday, but that's very threatening. It's 0.04%, 6,131.73. Abu Dhabi is on the flip side, 10,054.27. It's 0.21% in the green. See other parts of the Middle East, the Tadawul as well as Qatar, also green at intraday, 0.24 for Tadawul and 0.32 for Qatar. Let's see what's happening now in the American markets. We see for futures before official opening of the market, the futures for Dow Jones is green, slightly green at 49,007. Doesn't look like investors are very excited for early trade in the United States. S&P 0.2 in the red, on NASDAQ is 0.43. Also in the red. So let's go to Asia, where market has closed at this time. For China, it's closed red, 0.44%. Kospi is positive, and Hang Seng is on the other side, almost 1%. That's a dip for the Hang Seng at 0.71%. Other parts of the Asian market, the Shanghai and Nifty on opposite side. The Shanghai is positive, 0.04, while for India, it's in the red, 0.38%. Let's see what's happening in Berlin. I wonder if the market is open today. Yes, it should be open, I guess. We have Lars joining us for that update. Hi, Lars. Welcome from the Christmas break. I know you're preparing for the New Year break, but what are investors doing this afternoon?
Yes, hi, Ine. It's good to be with you today. And indeed, markets in Europe are open. But of course, you almost wouldn't know it if you just look at what's happening on these trading floors. Pretty much nothing. Most of the European markets opened with slight losses this last trading week of the year. Well, it's not obviously, it's not even a week. It's just these 2 days, today and tomorrow. And there is definitely a total lack of enthusiasm. Volume is very low, actually less than half of what we've been seeing throughout December. But that's not a surprise at all. Between Christmas and New Year's, there's never much going on. Also, there's not even much news out there to react to. I haven't seen anything really important breaking. And looking forward, we're getting a few Fed notes out tomorrow in Washington, but even that is not going to hit markets anymore this year. That's only going to have an impact a little bit later. So you could really say for most traders and investors, I guess the year is pretty much over.
Yeah, Lars. I mean, everybody deserves a break. January all the way to December. You need to rest the body and the mind to be able to work well, but not for us anyway. We signed for this job, so we just have to do it. But Lars, even when there are no breaking stories, I think one of the things or conversations that we hear a lot this time is a review of the year and expectation for the new year. And we've been talking here since January on the European economy and all the tariffs and all of that. At the end of the day, what kind of conversations are going on? What kind of a year would you say it was? Or how is the economy as we close out of 2025?
Yeah, it's quite complex, but of course, Ini, you're exactly right. Everybody these days is talking about how was this past year and what is the New Year's going to bring. Now, Europe has obviously been through some rough times. Germany, in particular, has been in a recession for 2 years. 2025 was supposed to bring growth back, but the economy was pretty weak again, with current estimates for gross domestic product up a meager 0.2 or maybe 0.3%. So all is not well here. As for Europe as a continent or the EU as an economic bloc, we've struggled with growing competition out of China, with those trade imbalances, and as you just said, yes, with tariffs out of Washington. And many, were even shocked now to read most recently the United States' recent assessment that many European countries, quote, would not have a sufficiently strong economy to be viewed as a reliable ally. It doesn't really feel quite that bad. However, we've heard similar criticism from others as well as of late, including JP Morgan, where the CEO, Jamie Dimon, he said that Europe had repelled companies, repelled investment, repelled innovation. Ouch, it's some hurtful criticism here. But now it's good to read a report by some European economists that show that the situation is not quite as dire. And among those experts is the former ECB chief, Mario Draghi.
Well, that's a good one to end the year on a good note, I guess. But what parameters are these experts looking at, and what's the good news?
Well, they're starting with wealth and growth, and particularly looking at growth. They argue that often official data doesn't adjust for inflation, for currency exchange effects, and for population growth. And taking in these factors, they're finding that, yes, economic growth is slower in Europe than, for example, it is in the United States. But the difference stood at 30% in 2002 and only grew to 34% last year. So that is a rather moderate development. It is not at all a seismic shift. And yes, the US is more dynamic right now and more innovative, but not to the extent we often hear. Also looking at wealth, the experts here look at the median income, not the average, the median. The average is often distorted by extremely wealthy people. The median gives a better look at what most people really experience. And for the US, median wealth clocked in at $124,000 per capita, and that is far behind France, and it's about the same level as Italy and Spain. And for Germany, we don't have exact comparables because data is taken differently here, but we do see the year-over-year change, and it shows that for Germany, wealth is rising too, even though it's been pretty slow.
Yeah, but at least it's rising last. So let's find hope in that and build on that hope for 2026. Thank you so much for bringing a bit of good news, to us at this time.
Yes, thank you, Ini.
It's good to get a bit of good news there, from every country, everywhere, as we end the year. But let's see what's happening with crypto at this time. And I think, it's red, but I think we did hit 90,000 sometime over the weekend or this morning. That's for Bitcoin, but lost parts of that when this number was taken at 87,346. I wonder what kind of year 2026 will be for Bitcoin. So should investors just brace on and maximize these lower prices? I wonder, check your crystal ball and let it tell you what you should do. Ethereum is still far away from the 4,000 mark, which was its pride for some time in 2025. 2,933.70 XRP, Solana. Are people taking money here for Christmas? I don't know. Anyway, but these are what the numbers look like for the prices, cryptocurrency at this time. For stories making the headlines, we see that Japan has moved closer to cutting cryptocurrency taxes to a flat 20% for certain registered digital assets. According to its full year 2026 tax reform discussion, the proposal is set to replace the current progressive tax model, which can push effective rates to up to 50% with a separate taxation framework closer to how stocks tax. The change remains at a proposal stage at this time and still requires legal amendments and approval by the national body. However, policy language tied to financial reform packages shows that the government is aligning with this new crypto taxation, and that might even draw more people into the crypto space. And then looking broadly now, digital asset treasuries recorded a sharp resurgence in institutional inflows in December, drawing more than $2.6 billion over a 2-week period, even as broader crypto markets remained unsettled. And the renewed interest marks the strongest inflow streak in 7 weeks and suggests that large investors are selectively increasing exposure to core digital assets rather than retreating from the sector altogether. So, just as I said, just look at your crystal ball. And, with this drop in prices, just maybe, it might be a good time for you to get on board and, await that profit-taking period in 2026. Russia is still very active in the crypto space. They are planning to cap crypto trading for retail investors, strict oversight for intermediaries, and a phased digital ruble rollout through 2028. Russia's central bank has proposed regulations that would allow non-qualified investors to trade limited cryptocurrency according to the framework that has been submitted to the government for review. The Bank of Russia announced a proposal would permit both qualified and non-qualified investors to buy and sell cryptocurrencies under separate conditions while maintaining a ban on crypto and stable coins for domestic payment. That has always been their stance, and that's where we draw the curtains on Business Incorporated today. Thank you so much for being a part of this time going around the world of business. I'm John Mekwa. You have a great rest of your day. Bye-bye.